unfortunately, as I just sent out a little while ago, we had to change our agenda abruptly. I spoke to Devi, our planned speaker, this morning, and she deeply, deeply apologizes for the last minute change. She is based out of Singapore. She is a very ambitious and hardworking female founder of an ed tech company called Ascend Now. And hopefully we'll get her in the future to talk about her company. But in the interim, if you're interested in sending us questions that you would like answered, I can direct those to Devi, and we can look for some time to reschedule with her. I'm intending to expand our celebration of International Women's Day another month into April, hoping to bring on another female founder to discuss and highlight as well. So thank all of you for joining this morning. Hopefully it's not too bright and early. I know Saturday mornings can be a little bit tough, but always happy to see your smiling faces. All right, so moving right along. So with International Women's Day, it is a huge event and a huge milestone that we celebrate it so widely, around the world, every year. And a little bit of a history, International Women's Day has been observed since the early 1900s, where at the turn of the century, inequality really spurred women to speak out and march for their rights. In 1908, 15,000 women marched in New York City for better pay, better hours, and voting rights, which they didn't have at the time. Following this, the year after, the first National Women's Day in the US was celebrated on February 28th, 1909. And not long after, it went global in 1910 with a gathering of European nations discussing the same. This was officially ratified by the United Nations in 1975. And in 2011, in the US, March was recognized as Women's History Month. And to this day, now here we are in 2021, we've seen significant changes in society's thoughts on equality, women's rights, and really the role of women in the workplace and overall society as a whole. I'll share a personal anecdote, from my life that really, like what International Women's Day means to me and in my family. So I feel I was very fortunate growing up that my family was very open-minded. And at home growing up, it was actually my father who stayed at home, took care of the house, took care of the kids. And they made that conscious decision that my mom, who had a different career track and trajectory, would be the breadwinner, for the family. At a time when back in the 90s, it was still very unbalanced, right, with primarily men being in the workplace. But I feel fortunate that I got to grow up in that sort of household where women were just as much the breadwinners as men, and there was no such bias, at least coming from my household, notwithstanding broader society. And so I feel like that's really stayed with me. And I'm hoping that when we get to the open discussion forum for this part of today's session, we can talk about what that means to us, and we can talk about significant female figures in our lives. So with that, we'll get to the community building in a moment, but first I want to pivot to our financial tip of the month. So Ed, what are you bringing to us this month?
Right.
Personal finance.
Yep. So this month I am sharing something called Bank Bonus Churning, which I don't know if I've talked to too many of you guys about. This is something that Brian's actually introduced to me maybe a year ago. He likes to call it Bank Account Roulette, which is also a good name. So
branding.
Bank bonuses are something that banks do for new customers, and they recycle these bonuses on an annual basis. And the bonuses can be quite a lot. So if you sign up with a new bank, they usually have some kind of requirement, whether it's a direct deposit or you have to, store some money into their checking account for X amount of months. And these can add up to be quite a lot, as I've found out. So a great site that tracks all these bonuses is called Doctor of Credit. So that's kind of where I start off. And then from there, they kind of lay out exactly all the requirements that it takes to get these bonuses. Some of them are, require like maybe a $10,000 or $15,000 deposit. But if you've been to any of our personal finance 101 sessions, we do recommend having like 6 months of emergency savings. So this could be a good way to store that money and still get a decent return on it, on having that. So step one is kind of finding the deal. Step two is tracking all the different deals and figuring out how to achieve it. And then you get the bonus a couple months later. So far in 2021, I've done 6 different ones at about $350 each. And we're only into the end of March. So these add up quite quickly if you can find all the deals and then track and manage it. So this is how I manage mine right here. So you have to be pretty organized if you're going to do this. So I track, the date I open these things, what the bonus is, and what the requirements are. So the best ones are really just direct deposits. So all you really have to do to get these bonuses is change where your direct deposit is going through your employer. And then what I do is I reroute the money all back to my main checking account so that everything stays the same there. And then once you hit the amount required, you can kind of see what it takes to avoid the fee, and then just leave the account open until you get the bonus, and then you kind of rinse and repeat.
So Ed, maybe let's walk through a couple of these in a little bit more detail. So I see from the first line that you have, Capital One had a offer where if you set up direct deposit and at least 2 direct deposits hit the account, you get $400.
Yeah, so this is probably the easiest and best one I've done, because all you have to do is you need 2 direct deposits of 1,000 or more within 60 days, and then that's all it takes to get the bonus. So once you do that, you can stop direct depositing there, and you can switch back to either your main checking account or one of these other deals. But Capital One didn't have any fee. So some banks, as you see down here, if you don't have any activity in the bank, they'll charge you a monthly fee in your checking account. Another thing to watch out for is early termination fees. There was none here. And this is something that I calculate because, is it worth the time to do this stuff? So I try to get a calculation of how much ROI I'm getting after taxes. So this one is super high ROI because it really essentially doesn't cost you anything to do it, because you're not storing any money in this checking account. You're just moving things around. So these are the best type, super high return. Some of these other ones you can see are lower return. This PNC one is 9,000 or 9% return, because you have to have 5,000 in the account in order to avoid the fee. So 9% return is still very good, but it's definitely not as good as some of these other ones where the requirements are not as high. So there's a lot of these. They change all the time, but they can be worth it. It probably takes, I would say, under an hour to manage this process end to end. Once you kind of get the hang of opening and closing accounts. So
that's great, Ed. Why do banks do this?
Yeah, so it's a good way for banks to sign up long-term customers. That's obviously not what we're doing here, but banks offer these bonuses to incentivize people to kind of stick with their bank. So you might ask, what is the value of doing this over time? So I'm estimating about $2,000 this year from doing this. I'm going to throw up a poll really quickly. So if we were to do this every year, $2,000 every year for 40 years, and you're investing that $2,000 and gaining 6%, how much do you think you would save after the end of 40 years? So I just threw up a poll now, 4 options: 100,000, 300,000, 500,000, or $1 million after 40 years.
Ed, I might be the only one who doesn't know, but you said make sure we claim our taxes on the ROI. What form should we be looking for at the beginning of the year from the bank?
So these, unlike credit card bonus points, these are taxable because they're essentially just giving you cash. There is a form, I believe it's called the 1099.
1099 INT.
Okay.
INT.
The banks will provide it, or you could also self-report it yourself. But that is a key thing to know. You will have to report taxes on these, unlike with credit card bonuses.
Yeah, banks will send it to you.
Yeah, Cassie and I did one last December, and we got the income, and I completely forgot about it because it wasn't that much. But then they sent us that 1099 form, and I was like, oh, that's taxable too. Great.
All right.
And then a really quick question: if you like transfer money, like you close an account and transfer to another account, are there fees with that, or is it typically like completely free?
So there aren't fees, and it doesn't impact you for, unlike with opening credit cards, this doesn't impact your credit. And there aren't fees for transferring money around between banks. All right, I'm going to end the polling. So we got answers across the board, but the group was right. The answer is $300,000. So it adds up to quite a lot over time. So I'd be good with an extra $300,000 at the end of 40 years for pretty minimum work and no risk. So
who doesn't like free money?
It adds up. If you're interested in what that $1 million number was, you would need $7,000 saved annually to hit that 1 million after 40 years. So, this 2,000 can be a pretty sizable chunk of that. One other thing that I forgot to mention is a way to kind of expedite this process is if you have the ability through your company to split your distributions of your paycheck. Luckily, my company allows this. So one of the things that I can do is I can put like $1 into one account to keep the bank from charging any fees, and then still work on some of the other direct deposit bonuses for other banks. So this helps you speed it up. I've done this, but I actually haven't needed it because I've actually run out of offers so far this year. So now, I'm just going back to my regular checking account, but something to keep in mind that your company might offer. All right, any other questions on bank bonus churning?
I have one. So with my direct deposit, it takes 2 weeks after I submit for that direct deposit change. Will that, or have you seen that it has affected you negatively if it takes a little bit longer to get to the bank that you're
yeah. So I keep a schedule. Well, my company keeps a schedule of when you need to make the change before it'll actually happen. I think the lag for me is, it's not quite 2 weeks. I believe it's maybe 1 week. But as long as you're pretty diligent about tracking these things of when you need different money to hit a certain account, you can plan for it pretty easily.
Usually, John, they give you a large enough window where they say deposit, direct deposit within 60 days or 90 days of setting up your account. So they do understand it will take time to change your direct deposit.
Yeah, I think the bigger concern there is actually the fee avoidance requirement. So usually, because fees are generally monthly, there may be something you have to do, but you still have a month to kind of figure it out in most cases.
Perfect, thank you.
Can you repeat what was the form, the tax form, 1099 INC?
INT.
INT. Okay.
Yeah, it should be the same one, Eliana, that you get for like the bank that's just paying you interest. It would appear in the same. So if let's say you have a bank account with Chase, and you do one of these bonuses, they would send you a 1099 INT, and that would include however $300 or however much the bank bonus was, plus any interest from your account, from having your money in the savings account, for example.
So if you were to take advantage of this system and you're opening and closing accounts, I'm sure the banks will know that you're kind of gaming the system, right? Though they wouldn't really care about one individual. I'm just wondering if it would have repercussions down the road if you were trying to open another account with them or get a mortgage with the bank or something. Like they just have records that you're doing this.
So
Go ahead, yeah, you first. You want to go first?
So it wouldn't have any impact on like mortgage things. So now we're talking credit, and this has no impact on credit. The banks kind of know people do stuff like this, which is why they do have limitations on who can get the bonus. Oftentimes you'll see in the fine print that it can't be a customer within like the past year. So it shouldn't have any impact on those things. But Brian.
Yeah, that's right. So yeah, I've been doing this probably for almost a decade, and it hasn't really impacted me at all. Yeah, to Ed's point, opening and closing new bank accounts does not affect your credit whatsoever. So it should not have any impact on you getting a mortgage, on any loans that you're trying to get. It should not at all. The motivation for these banks is they want to get your business. So you are free to open or close bank accounts as you see fit. They want you to put your money there. So they want to make it easy for you to come in, open an account easily, have your money there. And having your money there for even a short period of time. That's why they create the lock-in periods of saying, all right, within 60 days, you have to keep your money here, or 90 days. They are using your money, because when you deposit your money at a bank, they're using that cash for their business to lend to other customers and get even more interest. So part of it is for the bank a marketing cost, to get you in the door as a new customer, and they hope you'll stay. But if you don't stay, then that's fine too. They still have a majority captive audience that most people who open an account will end up keeping their money there for probably a year or longer, and not churn the way that we're proposing here. So what we propose here is kind of like it's a well-known secret, I guess. It's not totally secret, but this idea of like churning bank accounts is something that's kind of a unique strategy to us. But it tends to work better when you have a little bit more capital saved. So not everyone can do as many of these bank roulette changing of accounts as we can, but it is open to anyone. Anyone can open an account, and get the bonus, and then after 6 months, a year, whatever, change and do it all over again. Note that yeah, go ahead, Gloria.
Do you guys have like a main account or checking or savings account that you use, but then on the side you're doing this, or do you also kind of change your primary account depending on the situation?
I think we beach differently. I use Chase as my main checking account, as I have for, I don't know, since I graduated college, I guess. So I don't get any Chase bonuses because I never close that account. And then on the side, I'm opening up all these other accounts and routing all of the money into Chase. So Chase is still paying all of the bills.
Yeah, it still makes sense to have, to Ed's point, one central account for paying all your bills, because then you set it up, your bill pay, and then you don't have to change it, even if you're doing this strategy. For me, it was Charles Schwab was my main bank that I was doing that for. And if you attended our session last month, though, with Andrew Stanko from One Finance, I have recently changed over so that One Finance is now my main bank for paying bills, because the interest rates are so good that I'd much rather park all of my cash in the One Finance accounts and let it sit there. So that's my new, my bill pay account. One thing I just wanted to mention about some of these bonuses. Yes, some of the banks are catching wise to people doing this. So you do have to read the fine print, but sometimes they do say this opening a new account and getting the bonus only applies to people who have not opened a new account at the bank in the last year. So if you already have a Chase account, or Chase, let's say a Chase checking account, and you see a bonus for another Chase checking account, you would probably not qualify to get that bonus because you already have one, and they're like, you're already our customer, like we don't need to pay you to come back to us. But if you have a Chase account, you could easily go over to Citibank or Capital One and take advantage of one of their deals. But just note, what you see here with Ed is he notes the date in which he last did it. So that if he churns again, does the roulette again, he knows the last date that he set up and closed that account, so that he knows he's eligible for the bank bonus when he spins around and does it again.
Yep, that's right.
So Ed, I think actually then, this is Jeremiah speaking. I know I haven't, this is my first time here. But I was just thinking maybe you can just share that sheet, because I feel like for these types of things, you just need to know like who's giving what for at what time, and then everyone who hasn't done that series of steps can just like replicate the same.
We
I think
send
like
out
Reddit,
that tip.
there's even a Reddit that does like a little bit of that. It used to be like for credit cards, which I played a ton of. But now I think this is like the new, or like the more normal version of that.
Yeah, credit cards are good also. They require more work, in my view, because you have to spend a certain amount to reach the bonuses, and then you got to get really creative on how to spend, $5,000 in 2 months if you normally wouldn't. Whereas this is just your normal income and just rerouting money in different places.
I was gonna say actually the credit card game is kind of gone since Chase's experience with the Sapphire Reserve. So after the Reserve, I think you like follow what happened to Chase. They took a massive loss on the credit card product, and then they decided that rewards, because like basically everyone our year like figured out that that was like a good deal, and so there was like a mass amount of trading on that card. So they started like towing back on sign on like rewards. But just my views.
Yeah.
I'm curious. I know it varies probably from bank to bank, but are there any bank accounts where they close it out automatically after a certain period of time for inactivity? Let's say you created one and you completely forgot about it.
If you have a zero balance, it will get closed out if there's a significant period of inactivity. Generally, that's just good hygiene on the part of the bank. But what you do have to be careful about is if there was a fee associated, like with having a minimum balance, then the bank will take it from you, even if you haven't been active in a while, because those are the terms of the account. So be careful with those checking accounts that have minimum, $1,500, minimum balance. If you hit zero and it's just zero for a while, they're not just going to close it out. They'll just keep billing you.
They'll just overdraw it, and
they'll just keep finding you, and then it'll stack up. So be careful. You do want to monitor your accounts. But that said, if you're not going to use it, I always call them up right away and say, hey, like when we do this bank roulette, bank churn process, like when I know I want to close an account, I call them up and I say, I want to close it today.
Hey, I got your money. Please close my account now.
Yes.
It's usually not that awkward of a conversation. they don't really care.
Right. Exactly. Awesome. Any other questions on this? Really good discussion here. Okay, I think let's pivot into the community building a little.